Good evening, and welcome to another exhilarating episode of Investigative Accounting Journalism, the show that combines everybody's favorite two things, accounting and gotcha journalism. On this week's episode, we will dive further into the financial records of SeaWorld. Not only will we explore SeaWorld's current liabilities, but we'll also take a look into the stockholders' portion of the 10K. Now over to my co-anchor, Bridget Hogg, with some insight into SeaWorld's current liabilities. Bridget?
Thanks, Erica. According to a SeaWorld's balance sheet, their total current liabilities in 2013 were upwards of $252 million. This was quite a jump from 2012, when their total current liabilities were only $246 million. Two of SeaWorld's current liabilities are their accounts payable and their dividends payable. The total accounts payable is $98 million, quite an increase from 2012, when it was $89 million. Dividends payable were $17,939,000 for 2013, but only $203 for 2012. In my expert opinion, this wide discrepancy in amounts can probably be attributed to the fact that these are current liabilities and not long-term debt, so the amount will vary from year to year. Now over to our long-term debt analyst, Graham Heck, with more insight into SeaWorld's balance sheet.
Thanks, Bridget. I took a look at SeaWorld's 10K and found that in 2013 they listed their long-term debt as $1.6 billion. Now in 2012 it was listed as $1.8 billion. However, while SeaWorld did not note what type of debt it was, I am still digging. I'm Graham Heck for Investigative Accounting Journalism.
Thanks, Graham. Hi, I'm Johnny Ricchio. Driving further into SeaWorld, 10K revealed that the total stockholders' equity for 2013 was $645 million. In 2012, it was listed at $449 million.
SeaWorld had two of their stocks listed on their balance sheet, preferred stock and common stock. There was no value listed for preferred stock for either 2013 or 2012, but this just in. After more investigating, we do know that preferred stock is listed at a 1 cent par value authorized at 100 million shares. No shares were issued or outstanding in either December of 2013 or 2012. Now out to our undercover field reporter, Liz Hicks, who stands just outside of SeaWorld headquarters in disguise, hoping to get us more answers from the inside. Liz?
Thanks, Erica. Sadly, my foolproof disguise was not enough to get me inside the headquarters this time, but I do have more information on the stocks listed on SeaWorld's 10K. My sources tell me that SeaWorld also has its common stock listed at 1 cent par value, authorized for 1 billion shares. They were 89.9 million shares issued in December of 2013 and 82.7 shares issued and outstanding in December of 2012. My sources also outlined the state of SeaWorld's retained earnings for me. For our new viewers who don't know what the amount represents, retained earnings represents the sum of SeaWorld's profit after dividend payment. SeaWorld's retained earnings were listed as $7,991 in 2013. In 2012, there was a deficit in which they retained earnings were negative $6,648 billion. And in my expert opinion, this must mean that they have more liabilities than assets. Now, over to Mitch for more on SeaWorld's notes to financial statements. Mitch?
Thanks, Liz. I dove further into SeaWorld's stockholder equity and found out that as of April 7, 2013, the company's board of directors authorized an 8-1 split of SeaWorld's common stock. Furthermore, I found that in 2013, the company's board of directors adopted a policy to pay stockholders a regular quarterly dividend. The board declared quarterly cash dividends of 20 cents per share to all common stockholders. As the company had an accumulated deficit at the time, the June 20th dividend was declared. This dividend was accounted for as a return of capital and recorded as a reduction to additional paid-in capital on the accompanying consolidated statement of changes in stockholders' equity. Back to you, Bridget.
Thanks, Mitch. Also looking into SeaWorld's notes to financial statements, we found that they did not list any of their contingent liabilities specifically. Individual details of current court cases were not being disclosed at this time. When asked to comment, SeaWorld said, as it listed in their financial statement, that, quote, the company is a party in various claims and legal proceedings arising in the normal course of business. At this time, management does not expect any known claims or legal proceedings to have a material adverse effect on the company's consolidated financial position, results of operations, or cash flows. Quote.
Wow, That was an exciting episode in investigative accounting journalism. Thanks for tuning in, America. Once again, we're Net Income, and stay classy, Accounting 205.